Are you tired of all the bad news? Well, guess what? We finally got some good news on the current financial markets. What do you think about that, DeLynn?
Great.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. You know, I was just thinking it's been a long time we've been doing this show, and hopefully helping a lot of people out there. I know I'm throwing you off because this is totally not what we're
Was this in the script? Because I don't remember. Don't worry about us.
Sorry, that is just my phone, you know.
So anyway, go ahead. You were on a roll.
Anyway, so it's been a long time since we have been doing this show, and we have seen things change dramatically in the mortgage industry, so that we had started this show many, many years ago talking about after the real estate crash.
Back in the early 50s?
No, after the real estate crash.
Yes.
You know, just to bring some positiveness into all of the depression and things that were going on at that time. That was a horrible time for a lot of people. And right now,
we're some new horrible times.
We are going through another very struggling time as a nation, and in this case here as a world, you know, the entire world. This is global, obviously. So it's trying times right now, and moving forward TV has always been about moving forward based upon whatever situation we're in. We want to move forward and do the best that we can. So that's what we're here to talk about today, is some of the positive things. Yes, we're in some really crappy times right now, but
tell us how you really feel.
But there's some positive things that that are coming around, and we wanted to kind of touch on some of those things.
There are some positive things. You know what? A lot of people actually, and a lot of businesses right now are actually thriving. There's certain sectors that are doing well. There are some that are really hurting right now. Right. And I hate to call it the new normal, but you know, I know we're starting to reopen here in Florida, which is a good thing.
Yeah. For
a lot of business, definitely need it. I went to my first visit to a local restaurant the other night, and it was sad that hardly anybody was there. So, but I think it's going to take time. People will start coming out again. And of course, you know, we're going to talk about mortgages and guidelines and all the fun stuff and exciting, interesting things people want to talk about. But you know what? The good in all this right now is the government is stepped in. They're offering all different loan programs. I mean, we had Summer Robinson on last week. We were talking about PPP, the unemployment stuff, the extra money people can get. And one of the things we want to talk about this week is the refinance market and the purchase market and what rates are doing and how it can impact and help people right now.
Right.
I mean, we both got in this business to help people.
Exactly.
And our phones are ringing off the hook. I mean, I can't tell you it every day. I'm thinking about refinancing. I'm thinking about refinancing because I heard rates are at 2. Or they're free. There's a zero interest loan. No, there's not.
I know. And the thing to keep in mind is it doesn't make sense for everybody. So it's okay, give us a buzz, and we will absolutely be happy to run some quick numbers with you, but it's not necessarily the best time for everyone. And there's a lot of different factors that go into it, and that's kind of like some of the stuff that we wanted to touch on first. So we're going to talk a little bit about refinancing, and then we're also going to talk a little later in the show about purchasing and how what's going on in the current industry affects the purchase market.
It's all good stuff. It
all
really
good
is.
stuff.
You know what? If you had told me 6 months ago we'd be pushing in the low 3s on a 30-year fixed rate with no prepayment penalty,
I never would have believed it either.
Yeah, right, DeLynn.
I know.
Sure. What are you smoking,
well,
girl?
and I got to tell you, as you know, I started in this business and interest rates were double digits. Double digits was the normal was 18%. That's crazy high, high. So that's where they were. So to tell someone like me who started in this business when interest rates were 18% that they're now in the 3s, no, I never would have believed it either.
Yeah.
But of course, I was, you know, there was an entire decade where interest rates between the 90s, you know, in the 90s, the interest rates were hovering somewhere between 7.5 and 8.5. For about a decade, between 7.5 and 8.5, for about 10 years, the interest rates were there, and the country ran just fine. So I, at that time, was one of those people, I never would have thought they would, and I remember when they went to 6, and I was just like, oh my gosh, they went to 6, and everybody was refinancing.
Yep. It was
You
a
know, so I
crazy
never
time.
would have thought that they would have gone this low.
And
So it really is amazing, and it's really good stuff. But like we said, doesn't make sense for everyone. So we
And it
wanted to talk
doesn't.
about that.
And, you know, some of the 15-year rates now have actually pushed down and, you know, seen down in the 2s.
Right.
And people get excited about that. But does it make sense to go from a 30-year to start over when you've been there 10 years and go
I
to a
know.
15? Yeah, sometimes it does.
Right.
You know, people are, you know, it just depends on your situation. And, you know, there's no rule of thumb. I'm going to put my thumb up. Because there's no rule of thumb on the say, oh, if my rate's not down by 1 point, it doesn't make sense.
That
Because
was old-fashioned.
Yeah.
They definitely used to say that. If you're not dropping by 2%, don't do it. Not the case anymore.
no, not at all, because your loan sizes today are bigger than they were years ago because property values have gone up. So,
And you know what? Everyone's situation is different. If you really need to save, even if you're saving $100 a month, I did have somebody say to me, you know what? $100 a month is $100 a month. And to me right now, that's gas in my car. You know, that makes sense for me. So everybody's situation is a little bit different. So you have to,
and I think it really depends on, you know, what are you going to do with that $100?
Exactly.
Are you
That's
gonna
a big factor.
Are you going to use it to pay off high interest credit card debt?
Right.
And it absolutely, you know, and people get hung up on, oh, I'm going to pay this much in closing costs. But yet you're okay with 18% credit card interest that you've been paying on for 5 years.
Right.
That's, you know, and it makes me crazy, you know, and or 24%.
Can you tell he gets a little passionate about that?
Gosh. Yeah, because when I see 24% interest and
I know.
your compounded interest doubles every 3 years, it's like,
I
what
know.
are you doing? What are you doing? Think about it. Oh, I don't want to spend $4,000 on closing costs. You spent that last year on your credit card interest.
I
What are
know.
you thinking?
I know.
You know, people get so caught up
And
in
even
the
if they're
small
not
picture.
going to, you could do a refinance and you could do what's called cash out and you pay off those credit cards. Or some people are like, no, I don't want to do that. I don't want to like increase anything. Fine. Then with the savings, like we said, even if it's $100 a month or $200 a month, whatever it is, chunk down on those high interest rate credit cards that are,
Absolutely.
12%, 18%, 24%.
So let's talk about that. So what affects the rates? You know, the big thing is, you know, you hit on it. Rate and term refinance rates, meaning you refinance only the principal of your mortgage, and I'm not including any seconds or equity lines you may have in place.
Right.
Those are going to get you your prime rates. So,
And let's say right here too, rates are not, that you can't just say, what's the rate? It's not the same for every single person.
yeah, it's for you realtors out there that send me a rate sheet.
Yes, there's no such thing of that anymore.
Yeah, I just want to smack you, and you know who you are. Sorry.
There's no such thing as that anymore. Not every person gets the same rate. Obviously, credit score makes a difference. Their loan size makes a difference. There's a number of things that we're going to touch on that make a difference. And one of the things that we were talking about is, are you going to pull cash out? Or are you just refinancing exactly what your balance is right now and that's it?
So
That makes a difference in your interest rate. Obviously, if you're pulling some cash out to pay off credit cards or whatever it might be, doing home improvements, a little riskier for the bank. The other thing is how large is the loan size? Little tiny loans or a
Right.
bigger loan?
Yeah,
that makes a
the
difference.
tiny loans do not get the best pricing. So if you owe less than $100,000, you're not going to get the pricing of someone that owes $200,000.
Yeah,
the pricing is better. And when you see pricing online,
2.8 you see in the paper
yeah,
or
because I know
online?
all of you go online and think this is the rate I'm going to get
Yeah.
because they posted that. They
That's what
post the best scenario
Right.
out there with 30% equity. The amount you owe versus what the property value is also affects your rate.
Yes.
So
That's called loan to value. So how much is your house worth versus how much money you're borrowing makes a big difference in your interest rate. The other thing is your property type and your loan type. So are you a veteran? Are we doing a VA loan? Is it conventional loan? Is it an FHA loan? Depending upon what loan type we're doing, that will make a difference in the interest rate as well as the property type. Is it a regular house? Is it a duplex? Is it a manufactured house? Is it a condo? Is it a townhome? All of those things make a difference in what the rate will be.
So when does it make sense to refi? So a lot of people bought houses, I always like to mention this, with a little bit of money down, or they started with an FHA loan, and
Right.
they have MI or PMI on those.
Right, that
Now,
mortgage insurance.
And you guys all forgot you had it. It was there when you closed. You're paying it every month. Again, you're worried about the closing costs, but you forgot about the MI or the PMI that's in your payment every month that you've been paying on for the last 5 years. Okay? Now might be a great time to get rid of that MI or PMI and lock in a lower rate. So even if your rate's only slightly lower and you get rid of that MI or PMI,
Which could be
if you-
$100 to $200 a month, sometimes more than that.
you'd be surprised at how much that little bit of a difference can make. And for those of you who are caught up on, oh, but I did this 5 years ago, I don't want to start over. You know what? With that payment savings, if you are just so focused on paying off your house that you're never going to pay off, I'm just here to say that. You just aren't. I'm just telling you. You all tell me you're gonna. Nobody pays off their house. It's rare. It's pretty rare. You could take that extra money you're saving every month and apply it towards principal. And that, if you look at amortized interest, if all of you look at your statements, amortized interest, you're paying this much principal in the early years. You really are. And then
About $1,000 a year.
yeah, it's $2 in my mind. Okay?
Rough numbers, I know.
But the amount of interest you pay in the later years of your loan decreases. So, if you paid that extra principal in the beginning, it obviously accelerates that payment. So if you're really hung up on, I want to pay off my mortgage sooner, you know what? Sometimes by refining and paying that extra payment, keep your payment the same, towards principal, makes a huge difference. Now I'm a fan of investing the difference
Right.
and compounding that and having money aside, because cash is king.
Absolutely. Not when you're buying a house, it's not.
No.
Because I have said for years, no, cash isn't king in the mortgage business. But absolutely for investment purposes. So if you're lowering your payment, take that money, like Barry said, and put it aside.
Put it
so many
somewhere.
people, what we have found during this whole crisis that's going on in the world right now is people were not prepared. From a financial standpoint, the people are lining up at Metropolitan Ministries and things like that because they were not prepared with some kind of a fallback savings account. So maybe now is something that we can learn from that and get yourself prepared. So again, if you are refinancing and only saving $100 a month, whatever it might be, take that money and invest it. Don't worry
Or
about
pay
paying
off
off your
credit card
house
debt.
right now.
Yeah.
Pay off your credit card debt or put it in a savings account. Put it in some sort of an investment vehicle to start so that you have a
You got to
cushion.
have an emergency fund. You
gotta
got to
have
be
an
prepared.
emergency fund.
Things were rocking and rolling back in
Yeah.
February, right?
Right,
And here we are in May, and we're kind of just floundering out there.
right.
All right, so let's talk about when does it make sense to refinance. So you used $100. If you save $100 a month and it costs you $4,000 to close the loan to refinance it, which will get stacked on your loan, simple math says 40 months is your break-even point.
There you go.
If you save $200 a month and it's $4,000 to close, 20 months. So if you're going to keep the house for that long a time, it's a no-brainer. And again, if you use that payment savings to invest or pay off other high-interest credit cards, maybe it makes sense to do it anyway. Even if you
Right.
think you're going to move in 2 years,
Right.
you could better your financial picture.
Chunk down at that credit card debt or whatever.
I mean, it makes a huge difference. So,
But if you don't have credit card debt to chunk down on, and then maybe it's not. That's why we say it's not necessarily for everyone. You're like, you know what? I know I'm going to get transferred in a year or something like that to another state.
Maybe
it doesn't
but
make
maybe
sense
you're
for
going to
you.
keep that house as an investment property and rent it out later. You could
you
lock
go.
in on your primary residence rate, which is going to give you
Somewhere in
the
the
best
threes.
rate, the best rate.
Right.
And it'll be an investment property later. The lenders don't care. You don't have to call them and say, hey, I moved out, moved my rate to an investment property. You locked in on a 30 or 15-year fixed rate. All right, so
Right.
closing costs. I know you love to talk about that because people freak out or don't understand necessarily, you know.
We definitely wanted to touch on the closing costs. So the closing costs, keep in mind, yes, it is a new loan again. Everybody has to do their job all over again. Your underwriter has to underwrite the file. Your processor has to process the file. If we need an appraisal, the appraiser has to go and do an appraisal again. The documents there has to be a closing, so the title company does their job again. So everybody does their job again. So yes, there's closing costs. There are costs involved. However, what I want to separate out and keep everyone aware of, right now, in most cases, people are escrowing for their taxes and insurance. So your current lender has a nice little savings account, your escrow account, that has your money in there for the taxes and insurance. When you refinance, they're not going to give that money to us at the closing. After closing, they're going to give that money to you. So let's say you have $2,000 saved up in there to pay the next tax bill or the next insurance bill. After closing, they're sending that money back to you. However, at the closing, in addition to the closing costs for everybody doing their job, we have to establish a new escrow account. So they're going to collect money to pay the next insurance bill due or to pay the next tax bill due. But again, like I said, you're getting that money back after closing. So something to keep in mind. So it looks like a big number, but really a good chunk of that you're getting back from your escrow account.
Right, and it's your money. You're replenishing your money. And you know what? This time of year, it may look like more because people look at, total closing costs, $7,000.
Right, and that's not the case.
Where $3,000 of it is your escrow money.
Right.
You know, and they don't understand that. This time of year, remember, the tax bill is due in November here in Florida.
Right.
With that tax bill is due, you know, if you're closing in June, July, you're almost collecting for a full. Because the bill is due in November, the money has to be there. So there's only a couple payments you're going to make before November. We got to have that money in reserves.
Yes.
So always think that the money you're putting away in your payment now is probably for next year for the most part.
Yes.
So we're going to collect probably 8, 9, even maybe 10 months
pretty soon, right?
Coming up on it because that tax bill is due.
But that money is sitting in your current escrow account. So again, you're going to be getting that back. Right after closing,
they're getting ready to pay that bill in November.
Yeah,
there should be enough there.
They have a ton of money sitting there right now.
But some people waive escrows, and you can do that. There is a cost to do that. You know, it will affect
that is
your
an
rate.
option for some people, not for everyone, not every situation, but it is an option.
You need to be at 80% or below on your loan to value.
And that's what we're happy to talk to you about.
Yeah. So look at let's look at the whole big picture on that, and it may be a good time to consider refinancing. Though everybody should at least look at it and check back because maybe it didn't make sense. Your credit score went down. You know.
And to recap quickly, so the 5 things that we basically really need to know about is what property type you have, condo or regular house or manufactured or whatever it is. Loan type, are you a veteran or FHA or conventional? If you're pulling any cash out or not, what your balance of your loan is, and what the value of your home is, just estimates for right now. And then, of course, your credit score. It's not just credit score. People will say to me, I have an 800 credit score. So, that's only one of the 5 factors that we need to know.
Because they have beautiful credit.
Because they have beautiful credit, yes.
Yeah, they think. All right, let's talk about rates and how they affect our real estate partners and those you are shopping for a home right now, because it's really an exciting time.
That's the other thing that's going crazy. So a lot of people have taken this opportunity, I think, to go out and buy homes because there's a lot of people out there shopping right now.
You know what's funny? I've heard that there's actually some inventory available right now. So people that were looking and got frustrated, there are homes popping up on the market.
I think so. So I think what happened is there was a lot of people that were shopping. There was if it was priced right, there was 5 offers on the same house. Now since what's going on here, the shelter in place and things like that, a lot of people have stopped shopping for a home. So now there's maybe only 1 or 2 offers on the house. Well, people got wind of that, and guess what? Now there's 5 offers on a house again.
Yeah, yep.
So I think some people definitely started coming out. Where there's still some people sitting on the sidelines, but
and with rates low, not only could you either enjoy a lower payment and lock in. Think about this. You're going to lock in, for those of you who are renting, you're locking in on a 30-year fixed rate. And if you think about inflation, inflation's running 3.9%, whatever it is. The housing market is higher.
Right.
The price of houses is ultimately long-term going to go up. the price of your lease, your rental, is going to go up. If you can lock in on a mortgage today and you still have that house in 10 years, you're going to be below market on your payment. Oh, it's and people don't think about that.
And it's amazing, yeah. So 15 average rent or whatever, $1,200 to $1,500 a month. Do you know what that can get you in a house? That could get you your own house if you're comfortable with that
beautiful
payment.
house.
A beautiful house for that same price.
Now there's no down payment assistance at the moment.
Actually, there are some that are starting to come back.
So if you don't like it, wait a minute. But a little money down, 3.5%, 5%, you can get in, and it can be a gift too. So think about that. So let's talk about the impact of these lower rates, what it can do for your buying power. So for those of you who qualified before, in the last just a few months ago, you might want to relook at the numbers.
So over like the last year, interest rates have been roughly somewhere around in the 4s.
Yes.
So let's just say somewhere between 4 and 5, okay? 4
been
and
pretty typical.
4 and 7/8. Somewhere in there in the last year, that's where the rates have been. So let's do a middle of the road. We did some quick numbers, 4.5%. So over the last year, average interest rate probably around 4.5%. That would, if I had somebody who qualified, max qualifying of say $1,200 a month, that's kind of like where their qualifying was for principal and interest, that would equate to about a $250,000 loan for that person.
Actually, $1,266 at 4.5%.
$1,266.
That's principal and interest only. So
Right.
I love the numbers game.
I know.
Let's play more.
So now that interest rates are down to the low 3s,
So let's call it 3.25%.
that same $1,266 a month now gets you
$291,000.
So where you qualified before for $250, now you can qualify probably for somewhere around $290. What does that mean to you realtors? People can qualify for a little more house. Maybe they can get that pool. Maybe they can get that.
And for you home buyers, you have the same payment. Now,
the same payment.
Taxes, insurance may be higher on the 290 versus the 250 house.
Right.
But isn't it exciting to know that with this interest rate market, what it can do for your buying power? You can get more house and keep your payment the same. And lock in on a 30-year fixed rate.
I know.
And don't worry about rent going up. What do you think?
So like we said, so if you can right now roughly, and rough numbers, get about $290,000 loan, and your payment's about $1,266, with taxes and insurance, let's say $300 for taxes and insurance or whatever.
So $1,550.
So you're somewhere around $1,550, which is what a lot of average rents are in those nice high rises that are going up.
And you're living in almost a $300,000 house for that.
And it's your own house. You're not living in an apartment building.
Right, right.
With several other people. I'm just thinking that our viewers from like New York and California are probably
they're like
thinking,
300,000.
What? Are you kidding me? I can get a 300.
Yeah, they're all going to move.
They're used to paying $3,700 for a one-bedroom,
That's why
apartment.
15,000 new people moved into Pasco County last year.
Yeah.
And that's why this is such a desirable area to live.
That's amazing.
Because the prices of
15,000 people moved in.
And we talk about all the new
Pasco
houses
County.
we built. You know how many new ones we built?
I don't even want. Yeah.
5. So what do you?
5 houses?
5,000.
I just had to.
I knew it. So, you think about that, the demand for housing.
15,000 moved in, and we built 5,000 new ones. And I know that there's the potential that they're keeping on building out there.
But you keep thinking we're building, which we are.
Right.
But there's more people moving here than we're building. That's why the market is supply and demand.
So that means for you realtors, there's definitely a lot of business to be had out there. For you home buyers, there are homes that are coming out. And your sellers, don't think that everyone is going to go over to those brand new houses. They're not building those houses as fast as the demand is here.
Right.
So if you were considering selling your home, it's a great time to do that.
Absolutely, absolutely.
The market is very strong right now.
It's exciting times.
I think we saw a slowdown for like what, a week?
No, it was March 16th between noon and 3:30 p.m. We saw a slowdown. We like looked at each other and go, the phones are dead today. What's going on? Do you remember that?
I do.
I'm like, it's eerie quiet.
I know. All of you, the girls were all working from home.
Yeah,
it was
like-
just you and I
Yeah,
in
we're
the
like
office.
looking
and
at
it was
each other like, you want to
oh
get
my
coffee? Oh,
gosh.
nobody's open. We can't even get coffee.
Thank God for my Keurig on my desk. Thank you to my wonderful
Yeah.
husband who got me a Keurig for my desk.
That's
I
cool.
know, but it really, so we did have a slowdown definitely for a very short period of time. The market was hot and heavy, and it's back. I mean,
Yeah,
it really is back
is.
pretty strong.
And we're seeing
So-
offers and we're doing a lot of pre-qualifications right now. It's, you know what, with interest rates where they are, if you're considering buying, now is the time.
I have so many pre-approvals
Yeah.
backed up, people who are out there looking. So again, if you are a seller considering selling, now is the time. I have so
know.
many people who are out there looking
Yes.
that are all set, ready to buy, pre-approved.
Yep. So let's get them out there. All right, let's talk about our upcoming Lunch and Learn, DeLynn.
I don't
You're like,
even know.
oh.
No, I don't even know. We've been wavering back and forth. For those of you who are faithful at our Lunch and Learns, as you know, we've been doing these for a number of years now. The last several years, we've been doing them at Carrabba's on 19 in Port Richey. However, the last two,
Last three, actually. We did an extra one. We did a
March,
bonus one.
so far March and April. Oh yeah, we did two in March.
Yeah.
So the two in March and the one in April, we did them via Zoom. All of us are getting to be experts at Zoom these days. Definitely a little bit different, but I thank you, all of you who have stayed and hung in there with us, because we've had some great speakers
Yes.
that are on our Zoom meetings.
And we have another one coming up.
And I was going to say, and are we doing this virtual? I don't even
So
know.
we're looking at it. We're weighing it out. We've been talking with Carrabba's. Obviously, our safety is a concern. Carrabba's is concerned about it. The number of people and the way we
Right.
set up and how we break down. It would probably have to be small, so we'll have to RSVP. Looks like 30 is going to be our max allowed to participate.
And when we were at
in
Carrabba's in person,
We
we
had
were running close to
70,
60 and 70 people there.
We've
so.
had as many as 95.
Right.
So, we don't know how that works. So maybe only a small handful of you will be allowed to come.
Right.
But we will do it via Zoom. So we don't know this month exactly, but it is on June 9th. Mike Gallo is going to be our speaker.
Mike is wonderful, as all of you know. He's going to talk to us about the compliance with all the social media, especially now. Everybody's social mediaing, right?
Yeah.
Because we can't see people in person. So he's going to talk to you about you guys staying in compliance with
And
your
you got to
social
make
media
sure
accounts.
there's certain things that could get you in trouble with your license. So you want to definitely tune in. The links will be online. We're going to email them out. Let us know if you want to attend. Don't know if we'll be live or not, but either way,
Either
it'll
way,
be a great
we are
meeting.
getting information to you
Yeah,
guys.
so anyway, thanks everybody. Another great seeing all of you, and we'll see you next week.
Thanks for watching We Are Today and Every Day.
Moving forward.
See you next week. Bye-bye.
Have a great week.